Hi, welcome back to the channel. I'm Roy from Norse Effects. Very glad to have you back here for the continuation of the series. Today I'm going to talk about Brent, so the analysis from last week and what I'm looking for going into next week. I have a setup on Euro GBP that I'm really excited about, and I will touch on gold as well and just talk a little bit about the yen and the S&P 500 and what is going on with today's interest rates and what types of risk we are looking at basically right now in the market and what I believe will happen and what I'm planning to do and what I have already done. So right now before we start, what you're looking at is Brent crude UK oil on TradingView. This is the 1 hour chart. The gray line you're seeing is the EMA 50. And to me, that is the godfather line of technical analysis for Brent in a trending market, because my testing shows that the EMA 50, when oil is trending, it provides me with a lot of great entries. So I had a robot built specifically for this line last year that I'm still using, and it works amazing, and we can take a look at that right now. But what you're seeing right here, this is a symmetrical triangle on a 1 hour on Brent, and last week we had, or before the analysis, we had a breakout to the upside. My job as a trader is to follow price action, and when we see a clean breakout like this, my only job is to try to take advantage of the next move. And I anticipated 65.47 to be a very good point to get in the market. I allowed price to go all the way down to the upper triangle trend line, and I managed my risk by putting the stop loss below the previous low to the breakout. Let's click play and see what happened. So it took a few days. I had a limit order. I think 95% of my trades are limit orders because they provide me with better entries than a manual order. Then after I got the entry, I had a breakout entry, so a buy stop above the previous high to add to the position. This is the first area of potential profit taking. And when I saw the breakout higher, I didn't see any point of exiting the position, but you can see it straight away. When we come into this previous high right here and we failed, I closed 70% of my position and actually left some on the table because price eventually even broke even higher. So, but it is what it is. It was a perfect executed trade plan, and this one worked phenomenal. And the risk versus reward on this trade is just beyond insane. I can show the RVR so far on this trade. Risk down here, so 70-cent risk, and where I closed 70% was 6.29. So this is an insane trade. So anything above 1 to 3 inverse in terms of risk versus reward is very good business for me. It puts me far ahead and really helps me with achieving the growth that I actually need. And right now, let me switch to the daily chart. And right now, what I'm call it anticipation, but yeah, we can go with anticipation. That is a good enough term for what I'm about to say. Right now, I'm waiting for price to, I want it to spike above 71.28, so the 2018 high, so the high you're seeing right here. I want price to spike above and then fail at the highs, and that will be the trigger for me to go short on this. and use the spike high as my stop loss. So it gives me a place to manage my risk. And if you watch this series for quite some time now, I had a wish for myself or a goal to, if I have a trade that I'm planning to take going forward, I want to stock a setup going into the next trade. So overall, I'm bearish on Brent. I'm very bearish indeed. And so that means I want to go short, and I'm using this position right here to pay for the potential loss that I will have if Brent short will fail. So I closed 70% of the position, so the remaining 30% will pay for the potential loss that I have up here, since the remainder of the position is more than a 1% gain. So I can take even a bigger risk than normal and still be at break even for that specific trade, if that makes sense. So that is what I'm planning to do. I want to go short if we get failure at the highs, and until we see failure and price not being able to hold right here, I can't do anything. I just can't go short right here like a willy-nilly trade. That is not how I trade. So right now I'm just waiting and anticipating a failure above the previous high if we get there. And yeah, that is everything basically. Now over to Euro GBP. A few weeks ago I had a very nice looking setup when price was going up here. It was on the 7th of March, so wow, almost a month ago. And on Thursday, price hit my take profit almost to the pip. It exceeded my take profit with like 15 pips. And that is okay. I'm not trying to pinpoint the exact bottom. But right now, my bias has changed. So what you're looking at right here, this is basically a sideways market for the last, since September of 2017, or we can even go from this starting point, so October. So we have been going sideways for 5 months, and what I am anticipating, or well, what I'm risking money on right now is that the market will stay sideways for some time going forward as well, since we have a triple bottom right now, and that triple bottom also have a turtle soup pattern. If you're not familiar with that pattern, you can just Google turtle soup technical setup, or buy the book Street Smarts by Lawrence Connors and Linda Raschke. It's very good, and it gives some insight towards a basic way to trade these types of patterns. I trade it my own way, and basically everybody trades their own style, and yeah, that is what I'm doing. I have 2 positions long on this trade, so I have 1% risk. One position have a stop loss below here, and the other one has a 50 pip stop loss. So one of the positions has a more aggressive stop loss and one of them is more conservative. 75% of the 1% risk has the conservative stop loss below the hammer itself. This candlestick you're seeing right here, this is a hammer or a doji. So this child has a lot of names, but regardless of names, this is bullish. The only thing that concerns me and even gets me excited is the momentum going down into this support level. It's very hard. So the good thing about that is if we actually get a break to the upside, we will see a very good, fast, short squeeze, at least in my opinion. But it could also mean that we will see a new low, and that will be bad news for me. So just keep it short. I'm bullish and I'm already long. I don't like taking trades on a Friday, but when price prints the setup on a Friday, I really don't have a choice. My job is to follow price and just do what I'm told, basically, from price. And yeah, we can take a look at gold. Gold is, it had a level back, I think this is the level that I had a few weeks ago, and I had to wait a long time before I could actually do anything. And I'm long from, I believe it's this red candle and one up here, 1325. I want 1366 for gold. Right now I have take profit set on that level, but I'm considering right now to removing the take profit itself and replacing the take profit with a alert. So going with a manual management on the trade instead of a hard take profit, because just in case price have more legs, basically. And because if we get a move like this higher, I really want to be a part of that, because you can see here short squeezes like this, for me, at least for me, a move like this is almost impossible to get into, because I really need retracements to buy. I can't get myself to just chase price. When price is just going up straight up, I miss all of those trades if there's no bounces along the way. It's just the way I trade and the way I'm wired, I guess. So, well, I'm 90% in favor of removing the take profit and go with manual management, but I will take the final decision today. And today is Sunday, the 25th of March, and I will make a decision soon. S&P 500, this is heavy. I'm short right now. I shorted on Friday. I really don't like to go short on S&P, not because I'm going against the world or anything like that, but my backtesting shows that going short on the S&P 500, the probability of the trade actually working out for me and the way I trade is so low in terms of, or compared to going long, since this uptrend has only been, S&P have been in an uptrend since the 1650s, I believe. So going long is better for business than going short, and going short is just short term. So I have alert set for the next support, 25.31, no take profit. And if that fails, I have some parabolic trend lines going up and even another one there. And if everything fails, I have some last resort down here. So this is the end of the world type of scenario. It's always on my chart because I never know when shit hits the fan, basically. Sorry for my language, but that is what I'm doing on the S&P. EURCAD, I'm still short on this setup. I really don't like this price action that I'm seeing right now. We are now breaking above and below previous day candles, and the price action is choppy at best. I used EMA 50 right here as well to add to the position. So I have the first entry is from this high right here, and I have the second position short right here, and my risk is, I believe it's 160.10 in this area. So I really want to see 157.54 for this, because that will be an amazing trade for me. But since price action is starting to get choppy right now, I think, at least for me, that the probability is lowering as we speak for me getting to the take profit. I also shorted the yen, so I became a full size bear last week when it comes to the global markets. So I'm short from 105.25, so the retest of the previous break. So support being broken, and support should become resistance. So very, very, very basic technical analysis and basic trading going on right here, but it works, so why the hell not? I believe this is it. Yeah, I have an exotic. We can cover this as well. It really doesn't matter. This is the Turkish Lira. I have traded this one before, and that trade got stopped above here. The short trade I had from this, it was very good to get paid swaps for all that time, but the position is gone away, and right now the position is active. We have a triple top, and it's a very good swap pair to trade, and we have a very good. It looks to me like there's a lot of traders short or trapped long right here. So a very nice trap setting up, very extremely nasty candle. So I really like dollar Turkish lira for downside in the coming weeks. First target being 3.71. So I'm keeping my risk above 4. I think it's 404. I'm using the high and some pips. I use the ATR above the previous high as my risk on this. So that is what I think about the Turkish lira. So I like the setup a lot as well. So that's it for the analysis. Thank you very much for watching, and remember to hit the like button below and subscribe if you haven't already, and I will see you next time. Goodbye.